What's up traders, it's Nate. I'm a professional full-time day trader since 2016. I trade live the E-mini S&P 500 only on a naked 2000 tick chart. I use no indicators but the 21 EMA. I trade purely price action, trend channels, the two-legged pullbacks, second entries and traps. If you are new to price action, feel free to check my other videos all free on my channel. I trade my live account, live money and not any demo BS. I show only my live trades, winners and losers each and every day. And a quick notice guys, English is not my first language. I'm a trader, not an English teacher. So without further ado, let's jump in and see what we had today. Being consistent in trading is one of the most hardest things to do. When a channel breaks, traders will attempt to move prices to new high. It means that when a channel breaks, you don't want to go against it. You are looking for a reason to go long in the original direction of the overall trend. Channel goes up, breaks and close outside the channel, and now you're looking for a reason to go long. Channel, break, new low. Channel, break, new low. Channel, break, new low. When there is a break of a channel, prices will most probably go back to the original direction of the channel. Channel, break, new high. When the channel goes up, prices breaks. You are not looking to go short, you are looking for reasons to go long. Channel, break, new extreme. You don't go short when prices breaks outside the channel. Channel, break, new extreme. Every time prices breaks the channel and close outside, you are looking to go long in the direction of the overall bias. In this case, it's long. Uptrend, break, new high. Uptrend, break, new high. This is an uptrend channel. When prices breaks outside, you are looking for a setup here to go in the direction of the original trend. Again, downtrend, break, new low. Do you see the pattern? Downtrend, break, one leg to new low. Uptrend, break. Traders will attempt to make a new high. You see that here? Uptrend, break, new high. Down channel. Break, we are expecting new low. New leg to new low. Downtrend, break, new low. Downtrend, break, we are expecting new low. You see, every time you have a channel and price breaks out of the channel, you are expecting a new low in the direction of the original bearish bias. Uptrend, break, new high. Uptrend, break, new high. There is an uptrend here, there is a break here, and now traders will attempt to make a new extreme. Before we do anything else in our trading, I want you to memorize this and practice this. Whenever you have a channel, you mark the channel and you are not expecting for the prices to do anything but go in the direction of the original channel. Uptrend break, we are expecting new high. Downtrend break, we are expecting a new low. Uptrend break, we are expecting new high. Every time you see this pattern, forget about going against it. This is our starting point, and I need you to understand this. When you have a channel, prices breaks up, you are only thinking in the original direction of the overall trend. You know the old saying, the trend is your friend. It's exactly like that. You have a down channel, price breaks up, you are expecting new low. If you think about it, this break out of the channel is nothing but a pullback on a higher time frame. That's it. So when you see prices breaks out of the channel, forget about going against it. This is most probably just a pullback in a higher time frame.